Hello everyone, welcome to EPK Capital's daily brief video. In this series we try and update you and make sense of all the important news from the world of finance that came out globally. So, without further ado, let's begin. The financial markets have experienced a dramatic shift as October 2025 begins, with the convergence of a US government shutdown, Federal Reserve policy uncertainty, strong corporate earnings surprises, and evolving geopolitical tensions creating a complex investment environment. Major market indices performance September's historic strength. The major US indices completed an exceptionally strong September, defying historical patterns where September typically ranks as Wall Street's worst month. The S&P 500 gained 3.3% for September, marking its best performance since 2010. The index closed Tuesday at 6,688.46, securing its fifth consecutive monthly gain. The Dow Jones Industrial Average achieved a fresh record high, closing at 46,397.89 with a 1.7% September gain. The Nasdaq Composite surged 5.3% for the month to 22,660.01, also its best September since 2010. Notably, the Russell 2000 Small Cap Index broke a significant milestone, hitting its first record closing high since November 2021, ending a streak of 967 consecutive trading days without a new record. October opening weakness. However, October 1st trading showed immediate pressure, with S&P 500 futures down 0.7%, Nasdaq 100 futures falling 0.9%, and Dow futures declining 0.4%, reflecting uncertainty from the government shutdown. Government shutdown crisis immediate impact. The US government officially shut down at 12:01 a.m. Eastern Daylight Saving Time on October 1, 2025, marking the first shutdown since 2018-2019. The shutdown occurred after Senate Democrats and Republicans failed to reach agreement on stopgap funding legislation, with Republicans falling short of the required 60-vote threshold despite securing 55 votes. Economic data disruption. The most significant market concern is the suspension of critical economic data releases. The Bureau of Labor Statistics announced it will completely cease operations, reducing from 2,055 employees to just one full-time staff member. This means Friday's crucial September jobs report may be delayed or cancelled entirely. Fed policy implications. The data blackout creates significant challenges for Federal Reserve policymakers ahead of their October 28-29 meeting. The Fed's data-dependent approach to monetary policy becomes complicated when key employment and inflation indicators are unavailable. Scale and cost. The Congressional Budget Office estimates approximately 750,000 federal employees will be furloughed daily, costing taxpayers about $400 million per day in compensation costs. Federal Reserve policy landscape recent rate cut. The Federal Reserve cut interest rates by 25 basis points in September, bringing the Fed funds rate to 4.004.25%. This was the first rate cut since December, with newly appointed Governor Stephen Merang dissenting in favor of a larger 50 basis point reduction. Forward guidance. Fed Chair Jerome Powell has emphasized that policy is not on a preset course and will remain data dependent. The Fed's projections suggest two additional 25 basis point cuts by year-end. Market expectations. Markets are pricing in an 87.7% probability of another 25 basis point cut at the October meeting, though the lack of government economic data may complicate this outlook. Corporate earnings highlight, Nike's turnaround strong performance. Nike delivered exceptional first quarter results, with revenue rising 1% to $11.72 billion, significantly beating analyst expectations of around $11 billion. Earnings per share of 49 cents exceeded consensus estimates of 27 cents, despite declining from 70 cents in the prior year. Strategic progress. CEO Elliott Hill's turnaround strategy is showing early success, with wholesale revenue growing 7% as Nike rebuilds relationships with retail partners. Inventory management improved with a 2% year-over-year decrease. Challenges ahead. Nike faces headwinds from tariffs, expected to create an incremental annual cost of approximately $1.5 billion. Greater China revenue declined 10%, reflecting ongoing weakness in that market. Cryptocurrency market dynamics. Bitcoin's October setup. Bitcoin closed September at approximately $113,100, posting a 4.5% monthly gain. This positive September performance is historically significant, as years with green Septembers typically see Q4 returns exceeding 53%, with October averaging 21.8% gains. Institutional adoption. Bitcoin ETFs saw $430 million in net inflows on September 30th, while Ethereum ETFs closed their outflow streak with $547 million in inflows. BlackRock's IBIT has surpassed Deribit as the top venue for Bitcoin options trading. Regulatory uncertainty. The government shutdown may delay crypto regulatory decisions, as both the SEC and CFTC will largely halt operations. Economic indicators and consumer sentiment. Weakening confidence. Consumer confidence fell to 94.2 in September, down 3.6 points from August and hitting its lowest level since April. The present situation index dropped 7 points to 125.4, its biggest monthly decline in a year. Labor market concerns. Only 26.9% of respondents now say jobs are plentiful, down from 30.2% in August. This marks the 9th consecutive month of declining job availability perceptions. ADP employment weakness. The ADP employment report showed private sector job gains of just 54,000 in August, down from 106,000 in July and well below the 180,000 jobs added in August 2024. Geopolitical developments. Presidential military address. President Trump delivered a controversial speech to military leaders at Marine Corps Base Quantico, describing American cities as potential training grounds for military exercises and characterizing the situation as a war from within. Trade policy impact. The average US tariff rate has reached 17.4% by September 2025, levels not seen in over a century. This reflects the continued implementation of reciprocal tariffs under the International Emergency Economic Powers Act. Safe haven demand. Gold reached new all-time highs near $3,850 per ounce, reflecting increased safe haven demand amid political and economic uncertainty. Market outlook and risk assessment. Historical patterns. October traditionally marks the beginning of the strongest quarter for stocks, with the S&P 500 averaging 4.2% Q4 gains since 1950. When stocks perform well through September, Q4 performance tends to be even stronger. Current challenges. However, 2025 presents unique risks including the government shutdown, ongoing trade tensions, Fed policy uncertainty, and elevated geopolitical tensions. Sector performance. Technology and communication services continue leading with 14.6% and 20.9% trailing 12-month gains respectively. Energy remains the laggard, down 7.3% over 12 months. Conclusion. The convergence of a government shutdown, Federal Reserve policy uncertainty, strong corporate earnings, and geopolitical tensions creates a uniquely complex environment for investors. While underlying economic fundamentals remain relatively solid, the political dysfunction and resulting information blackout on economic data introduces unusual uncertainty. Key factors to monitor include the shutdown duration, alternative economic data sources, corporate earnings results, and Fed communications given data limitations. The cryptocurrency market's October setup appears particularly interesting given historical seasonal patterns, though regulatory uncertainty adds near-term complexity. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel. Just a quick reminder that this video is for educational purpose only and should not be taken as financial advice.